Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what is going on today. If you want to follow me at @Finance, and if you want to join our community, finding-value.com, we've got a 5 p.m. Mountain Time question and answer session coming up today, Sunday. I'd love to see you guys there. We've got a special coupon code. Special is the coupon code if you'd like to join, where you can get savings on both the monthly and yearly memberships. So starting off with brick by brick, imagine having $100,000 in an ETF paying 14% annually, earning $14,000 in dividends in a Roth IRA, all tax-free. You reinvest a portion into index funds and back into the dividend ETF. Repeat until 59 and a half. What a cheat code. Well, that's kind of what I'm doing already. I've got more money than this in my IRA accounts, my Roth IRA, and there's other accounts as well. You can use a health savings account. You can use a Roth IRA. You can use a 401k. You can take out money from your 401k if you're married. Up to $96,000, I think you can take out tax-free if you're married and together. Filing, I think that's the max or minimum max. It's the max for paying tax-free. Then on top of that, what you can do is you can take it out of a Roth IRA. And then what you do is you just turn on the dividends in all of those accounts. You can pay for your health care tax-free on your health savings account through the dividends that you had saved up over the years, which that's what I'm setting up. You can also take out tax-free from a Roth IRA or a Roth 401k after you get dividends. Then you can take out from let's say it's a pre-tax 401k account up to a certain amount, which will be tax-free. So you want to take advantage of all three accounts. The Roth IRA, the Roth 401k, those are both the same kind of account, so to speak. A regular 401k, which is taxable, and then a health savings account, which covers your health payments if you have any. And that's what I'm building up. I'm building up all of those. And I got lucky. I did catch the bottom of 2020 with oil in some of these accounts, which I grew them very, very big. And I also think that there's still opportunities in certain sectors going forward where you can grow these accounts dramatically. And that's just part of the cycle. The cycle goes back and forth. Right now, we are waiting for that cycle to, quote, re-engage for commodities. Commodities are still cheap to financial assets. And these are the accounts that you can take advantage with. There are a lot of dividend-paying commodity companies. Their dividends will fluctuate with the earnings of the company. Some of the companies pay their entire earnings out in dividends. Other companies, they buy back shares. It's a little bit more flexible and frictionless with share buybacks versus dividends, where depending on where you live, depending on the account, you may have to pay taxes on it. For instance, if I own a Canadian company, I have to pay taxes, foreign taxes on that payout of the dividend. If they buy back shares, then the full amount that is purchased in buybacks goes back to buying back the stock. There's no taxes paid, so to speak, there, from my perspective as the owner of it. Ryan says, a client walked into my office last week with a gleam in his eye. He just test driven a Porsche 911 Cabriolet and was ready to pull the trigger on a $138,000 purchase. He ran the numbers with him. The reality, a $3,106 monthly payment plus 10,000 maintenance over 5 years, insurance premiums that would make most people sweat. Total damages 156,000 plus, and that doesn't include the gut punch of depreciation the moment you drive off the lot. So, and then obviously they go into, here's some other, financial advisors won't tell you, why don't you just rent the same Porsche for 1 week, one perfect week each year for $2,029 for the week? The wealth impact is staggering. And he goes into some of the other money here that you could invest instead of putting it towards that Porsche. One thing that I will say, I don't know why people will buy a specific brand or car, but if you're a true driver, if you really love driving cars, which I do, I love driving cars, it's so fun. You can drive pretty cheap cars and get the thrill. You don't need an expensive car. You don't need something that's, quote, nice. You want to get in there and you want to rip it. You just want to have fun. You can do that for under $10,000 and have liability insurance only, where if you crash the thing, it's not that big of a deal. But you don't need an expensive car. You really, really don't. And if you're able and willing to wrench on a car, you can get absolute deals out there. And just to name a few deals, if you guys want to know what I'm talking about, an NC Miata, so that's like a 2010s Miata, early 2010s. Those things are pretty solid. Mazda RX-8s, if you can wrench on a car a little bit and you're not afraid of a rotary engine, you can get those things dirt cheap. No one wants those things. And I would say that's one of the best chassis of any car ever built, ever. I also think that Caymans are pretty solid if you want to go up in price. And a C5 Z06 Corvette, they're pretty cheap. There's a lot of power there too. So there's a bunch of cars out there where you could have incredible fun for I'd say under $20,000 for all of those cars outside of the Cayman that I um, just brought up. From on down, beware. Just heard someone who retired early at 37 years old and was depressed by 39. Went back to work and felt happy again, despite not really enjoying the work itself. If you're going to retire early, you need to retire to something, not from something. Um, I don't know. I don't know about this particular person, but here's a couple of things that I will say. It can be kind of weird if you retire young and there's no one that you can really hang out with because most people work during the day. So a lot of maybe that person's friends are all working and he's kind of sitting around going, kind of boring here. Not much to do. And, when you're at that age, you kind of have to find other people that are roughly, your same age or plus or minus 10 years that might be in a similar situation to yourself. I know it's hard to hang out with people who maybe are way richer than you or way, way, way poorer, because then if you say, hey, how about we go over here and hang out? One person might not be able to afford it. And then the other person's like, well, that's boring. I want to go hang out and go fly over to Paris. And you're like, well, that's kind of over the top there. I don't want to spend that type of money. So you kind of have to like congregate almost to people that are somewhat in your socioeconomic class or level to some degree, not always, but to some degree. Otherwise, if you're hanging out with people who have a lot of money, where they don't care and they value your friendship more, they'll just pay for everything because they'll be like, you know what, I don't care. I'll pay for you to go over here, pay for you to do this. And I have experienced all of those friendships over my lifetime, and I feel incredibly weird when someone pays for me. I feel really, really weird. That happened when I was in college, hanging out with people who made, well, their parents made a whole bunch of money. I mean, a whole bunch of money, millions of dollars a year of income. Some of them had so much money that they didn't know what to do with it. And they were like, we can hang out over here. And I'm like, dude, that's expensive. I don't want you to spend, $1,000 on me. He's like, He's like, would you do this if it cost you 10 cents? I said, yeah, I'd do it for 10 cents. He's like, that's what $1,000 is to me. It's 10 cents. It's like, okay, never mind then. Just kidding. But that's how he made me kind of realize, what that money really meant to them. Porter Stansberry says, or stocks or Bitcoin or gold, the real issue isn't housing. It's the Fed constantly printing money to finance the government. And as long as they keep voting for more government, they are going to suffer. And this guy's talking about America has two classes. Those that owned a home prior to 2021 and those who didn't and are falling further behind by the day. The despondency, resentment, and rage that number two has for number one really can't be understated. It's just bubbling under the surface for now, worries me. Well, yeah, it's just your currency. The people who get into the system later, they don't have a chance because all of the value's been sucked out of the currency. And then what's really going to stink is if we get artificial intelligence rolling here, how are you going to preserve your purchasing? I mean, not just preserving purchasing power, but like, how are you going to make money? The income side of it's going to get kind of weird. Because a lot of people, and I'm not, half the people of this world, you got the average IQ, you got, roughly 50% are above the average and roughly 50% are below, just for average. An average can be skewed one way or the other, but let's just use that as a rough thing. You could say the middle is about 100 IQ. If you're under 100 IQ and you're, let's say, 90 or 80, there isn't much you can do. You can't compete with someone with an IQ of 130, 140. I mean, you have no chance with the stuff that's coming up with artificial intelligence, programming, and setting up all this stuff. I don't think you can compete. I think in order to be admitted into the Army, the minimum is an IQ of 83. So when I look out in the future, and a lot of these jobs where you're kind of just building something in a manufacturing facility, plugging it into a machine and going, if artificial intelligence replaces that, I don't know what they're going to do. And I also don't know what engineers and some of these other ones, white collar workers and lawyers and assistants, I don't know what they're going to do. They're all going to be replaced with artificial intelligence, all of them. All you're going to have is like working with your hands, rebuilding kitchens or something for people. I don't know. The future is kind of scary in that respect because of the uncertainty around how capable artificial intelligence will eventually end up being and what exactly is going to be replaced. And where I kind of get confused, it's like, okay, so let's say artificial intelligence builds all of these things and replaces the bulk of human workers. Well, how are humans going to have income to buy any of this stuff that artificial intelligence is building? It's like, don't you need a job before you can consume? Like, don't you need an income and money before you can buy something? Um, that says law there. But yeah, it gets kind of confusing when you look out in the future there. New construction inventory is at its highest level since 2007, but there's a difference. Uh-oh, he's looking into the data. So that's what everybody sees. They're like, oh my God, look at this. It's almost as high as 2007. But less than 25% of that listed new construction inventory is completed. Less than 25%. 75% is either not started or under construction. Read our full roundup of the 2025 housing market. So everybody shows you this. Oh my God, look at this. New construction housing for sale. Oh my goodness. But new home inventory that's completed, that's not like 2007, guys. Looks like they're not looking at the data. Here's new home inventory that's not completed. So they're adding this, and everything else to get that. But it's not really the same as 2007. Those were all completed homes up here for the most part. And here we don't have completed homes. They're either not started or in construction. JP Morgan CEO Jamie Dimon says the US government shouldn't be stockpiling Bitcoin. We should be stockpiling guns, bullets, tanks, planes, drones, and rare earths. Wow, that's going out on the limb there. Stockpiling guns, bullets, tanks, planes, drones, and rare earths. Here's Fran. He says, another prospect upload from this week. 33 years old. He has no kids or she. 130,000 income. Ready to dial in the finances. Instead, he got sold a 532 a month whole life policy. 1.65% fee for an IRA rollover into 3 Vanguard ETFs. Any guesses on which company pitched this? Why would you roll that over for a 1.65% fee? And I'm not a big fan of whole life policies. I don't do that stuff. He found his advisor through a friend at work. She worked at one of those big name firms. The advisor promised a full financial plan. What he got was a commission machine. Here's what he was told. This policy is an investment and insurance. You'll build cash value and borrow from yourself. It's forced savings with guaranteed growth. If something happens, you'll be covered. It always sounds smart until you see the numbers. 532 a month is 6,384 a year. Over 30 years, that's 191,000 plus in premiums alone. Break even on cash value wouldn't happen for 10 to 15 years. Guaranteed return often 2 to 3% before fees. An internal rate of return usually equals less than a conservative portfolio of index funds. What about investing instead? That same 532 a month invested into a diversified portfolio, earning 8% equals 728,000 plus after 30 years. One is wealth building. The other is fee-heavy, commission-driven insurance. Yeah, and watch out for that. Watch out for that. The advisor recommending rolling over his old 401k into a traditional IRA then charged 1.65 AUM to invest in a basic Vanguard portfolio. That's 55 times more expensive than buying the exact same ETFs yourself. So, guys, be careful who you're using and what advisors you have because they're just stealing your money. That's all they're doing. They're stealing your money. You don't need to go into some of this. And a lot of it is just portfolio allocation and trying to find investments. And if you're going to do ETFs, look at your expense fee. They're actually charging another fee on top of the expense fee to get it into their whatever their portfolio or their under their management. That's what I'll call it. Investment wisdom. Peter Lynch says nobody can predict interest rates, the future direction of the economy, or the stock market. Dismiss all such forecasts and concentrate on what's actually happening to the companies in which you have invested. So focus on the companies. Stop listening to people trying to make all these different market predictions. Nobody can predict those things. EU Commission spokesperson, we strongly regret the announced increase of U.S. tariffs on steel imports. EU Commission spokesperson, the tariff increase also undermines ongoing efforts to reach a negotiated solution. We're seeing these tariffs turn on and off like a light switch all over the place. Are these going to stick? I have no idea. But things are always changing in this market and the uncertainty is pretty dang high. Jim Bianco, and I'm only going to read the first one here. He says, why the Fed is not cutting anytime soon. The economy is rebounding strongly and prices are rising. Wait, that's different than the whole recession crowd. It would be reckless to cut rates under these conditions. The market knows this. See this chart. The probability of a Fed rate cut over the next 3 meetings is pretty low. Pretty low. It's declining. The money cruncher. So 25% of doctors in their 60s aren't millionaires, and 10% of them aren't even worth $500,000. This is despite them making at least $200,000 per year for many, many years. Income is important, but how you manage it is even more important. Is that true? I'm not sure what doctors make per year. Because it says 25% of doctors in their 60s aren't millionaires. Well, what's the bottom leg on what doctors make at that time frame? I don't really know. I don't know if they make 200,000 or not. Who knows? I really don't. Age is your biggest asset. Assuming 8% annual return and investing 200 per month, and you can see when you do that when you're younger, it compounds. That's exactly what I did. I started at 22 and just dumped a whole bunch of money in over all those years, and then it goes way up. I put way more than this person did. I was putting a zero on the end of that. It was not 8%. So assuming 8% annual return investing, I was doing well for some of that. It wasn't the whole time, but I was doing thousands of dollars a month every month for a very long time. And then when I moved out, because I lived with my parents for 2 years after college to build up some savings, then it declined some. So, but yeah, that's the compounding difference using the same amount over an 8% annual return. A great podcast with Jason E. Burek and Dan Steffens on the oil and gas market. Oil bottom is here, $75 oil next year, and very bullish on nat gas prices. Does he know that for sure? No. Obviously, it's just an opinion, but it is things to listen to. I think it's a good YouTube to listen to, a good clip. Breaking: President Trump says tariffs will be imposed June 4th. And that's the tariffs on the steel and aluminum from 25% to 50%. Effective Wednesday, June 4th, our steel and aluminum industries are coming back like never before. This will be yet another big jolt of great news for our wonderful steel and aluminum workers. Make America great again. Here's a quote by Paul Samuelson. He says, investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas. That's gambling. So that's what he views investing, and that's kind of what I view investing like. It's really boring, guys. You buy something that's cheap, it goes down, it goes up. You may have to wait a good 6 months to 2 years for it to really take off if you're buying it when it's really cheap. And then you just sit there and do nothing for a long time. That's it. That's what investing is. It's not supposed to be exciting. If you're trading and trying to trade short-term market movements, the likelihood that you're going to be successful goes way down. Most people in the short time frames lose money. And again, that's more the gambling mindset. Here's an update from JP Morgan, another one. It says Jamie Dimon calls on Americans to stockpile bullets, gold, and silver instead of cryptocurrencies. Does that mean that they want you to go buy gold and silver, or is he actually giving his truthful opinion? I don't know. I know that they try to focus money flows to certain areas in some of these, um, speeches they give and whatnot. Who heard Lynn Alden's speech at the Bitcoin conference and got emotional about the state of our country. I choked back tears. Nothing stops this train. I feel this sadness for the people in our country, for all the sacrifices made by so many since our independence with the blood and hard work. The government sold us out a long time ago. We must tell everyone we can about Bitcoin, everyone. What makes you think Bitcoin is our solution? I think that's where a lot of people want you to go to. They want you to be in a central bank digital currency eventually. Gold and silver is in our Constitution. That's what I would go to as the number one thing. But government, yeah, the whole thing is about the Federal Reserve Bank. Go look up Thomas Jefferson quotes and all these different quotes of presidents about the Federal Reserve banking system. Go look at Abraham Lincoln. Go see what happened there. What about Andrew Jackson? What about Adolf Hitler? Go look at that. Go look at some of those wars, like World War II. Go look to see who was creating the war, who started the wars. It might be different than what you think, and read both sides of that. Don't just read the winner's side. Go see who is funding who. Go see who didn't have a Federal Reserve Bank and who is printing their own currency. It's the person who lost is the is the person who is printing his own currency. People were afraid. They were afraid that uh, the masses would find out that you could run a country without a Federal Reserve Bank, and that the strongest uh, economy ever built was built without a Federal Reserve. So I don't, you can listen to that and you can get emotional over this. I don't think Bitcoin's going to save anything. I think what people need to think about is, look at history. What economies were the most successful economies, if depending on how you define success, and um, see what happened. Try to figure out the real what really happened back then. That's what I'll say. The weakness in U.S. crude oil production is just getting started. So this is declines in Permian rig and especially fracking crew counts accelerated over the last month. So frac crew counts just declining rapidly. Same with Permian oil rig count declining rapidly. A lot of these, they look very similar to the charts of a lot of different um, energy service companies and oil exploration production. Coming down here, to hear a major bank CEO like Jamie Dimon say these things is surreal. Yeah, stockpiling bullets, rare earths, and all that stuff. Here's one from Caroline Levitt. She says President Donald Trump's economic agenda is working. Inflation is down, income is up, and the trade deficit just fell by the largest amount on record. Today's economic report follows multiple robust jobs reports below expectations, inflation reports, and a strong bump in consumer confidence. President Trump continues to prove doomsday experts wrong with his America First economic agenda that's delivering for the American people. Well, I don't know if that's true. I'm not on either side, guys. I'm not left. I'm not right. I just look at this and call it the way it is, at least the way that I see it. To me, I think we might have had a slowdown from 2022 onward, and that's what's causing the slowdown in prices. We also jacked up interest rates. So I think that's the root cause. It's not someone who just came into power where, and it, it's money printing too. So it's money printing and interest rates and all that stuff. So I'm not in the camp that one person comes in and then all of a sudden you see these changes rapidly hit. This is kind of momentum from the previous president and or lack thereof of momentum. It's kind of hard to say all these things. They said they were going to lower oil prices by drill baby drill. That's not how it played out. We didn't get 3% interest rates, and I don't think we're going to get that anytime soon unless you crash the economy. So they made promises that I don't think they could keep. I don't think we're going to get 3%. I don't think we're going to hit 3% deficits with 3% GDP growth. Um, I don't think that's going to happen either. And I don't think we're going to see, $50, $60 a barrel oil with a 3 million increase of 3 million barrels natural gas liquids or oil too increase. I don't think that's going to happen. We might see an increase maybe if prices were 80 to $100 a barrel, maybe. Um, I don't think we're going to see increases at 50 or 60. Use your salary to invest. Yeah, okay. I think we already talked about that one last time. So I'm going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We've got that Q&A session coming up later today at 5 p.m. as a reminder. And that's all I've got for today, guys. So we'll catch you next time. This is Finding Value.